I got some Corona, which I've,
Wow.
yeah, not drank for a long time, for a good few years when I was out east.
Huh.
I used to have a very good friend. He still is a good friend from Mexico, Fernando Ruiz, and he'd always drink this. And he'd always put sort of Tabasco sauce in it as well as drinking it. Forget the lime or the lemon, just to put Tabasco into it. But
Oh, wow. Okay.
yeah, early for you
Oh,
guys to be
wow.
drinking, I know.
Okay.
What about you, Dan? You had Ribena last week, I think, didn't you?
Well, we are live, so that little tidbit is on the recording, David.
My bad.
No worries, no worries. We can cut it out later. But
I'll clip it tomorrow morning.
hey, it's pretty good information. So um, nonetheless, okay. Sorry, David, to cut you off, but I hit the
Yeah.
button right when you started explaining that. Let's jump in here. Welcome everybody, and this is the Bookmap Academy we do every Thursday, and this is the part of the Bookmap Academy where we all meet up and go through the content that you created and documented in your spreadsheet. So if you haven't documented it in your spreadsheet, we won't know and we won't get to it. So that's what you got to do. And for those of you in the pilot program, like Thibaut and others, like you guys are making great content. Just get a spreadsheet and place it in there. Just copy and paste the link in there. That's all you have to do. And then we can go over it in the Bookmap Academy meetings. And you can also be on the path to getting Bookmap for free, as well as some of the add-ons for free. So anyway, if you guys are interested, for those of you over on YouTube or maybe in the room right now, for those of you interested in this process and partaking, it's really simple. Just go to bookmap.com, click on the More button here, and then under Community, you'll see Bookmap Academy right here, and you can go through this the process in here and apply as well. Okay, just scroll down to the bottom and you can apply here. So anyway, yeah, I won't go through all the details for the Academy, but it's we want to open the mic for you, listen to you, and then give you feedback and some mentoring. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so let's see. This is the process we go through in here for the Bookmap Academy, and I go through this 3 times a week in the webinars. Really, the part we focus on in the Academy here is number 4, your setup. Okay, these things in here are kind of without saying, like you got to go through these things. What's moving the market, the impetus, the fundamentals, the data. Like we've had a lot of data, and we've seen the markets move pretty strongly to the F1 or the non-farm, and tomorrow we got CPI. So who knows what that's going to be, and you know how the Fed may, or how traders think the Fed may react to the CPI data coming out tomorrow. And then we look at our key levels and we start to develop scenarios and strategies, and then it comes down to your setup and the order flow. And we should know this. We have a checklist, we grade it, we determine the sizing, and we just execute with the order flow. All right, so now about executing and that checklist. If you guys are interested in building an edge, a trading edge, there's this other program that's kind of a subset inside of the Bookmap Academy, Bruce's pilot program. So what this is and where this came from was because a lot of the traders that I work with over the years, the number one thing that I see they don't have is an edge, and nor do they have a process in understanding how to obtain an edge. Well, we have a process here, a structured process that will take you to a measurable and testable edge. And this is the fastest method that I've seen using some of the tools in Bookmap to really speed up the process. If you're interested in that, again, you can just go to bookmap.com and then click on the more button here and go to underneath the Bookmap Academy. There's Bruce's pilot program right here, and sign up here. Okay, it's all included with your Global or Global Plus subscription. We're also having the blue jacket competition using the Bookmap trade control panel. If you want to enter this, you can win 3 months of Bookmap plus data, and you can win the coveted blue jacket hoodie from Bookmap. The way that you do this is on X, Instagram, or LinkedIn. Take a screenshot of your best chart with all the markups on it, and just post it with free or hashtag free blue jacket, and you will enter. All right. Okay. All right, guys. Well, let's jump in and let's take a look at some of your content. And we'll start here with David, and then I'll invite some of the other coaches up to the stage here in just a second. So hold on a minute and let me get everybody's content here. Okay.
I've got Daniel R. I've got
Nan. Okay.
Yeah.
Yeah, that's what I see. So, yeah, let me.
Nan's in the room, and
Okay.
I thought Daniel was, but I may be wrong. So,
okay.
Yeah.
Okay, great. Got it. And let's jump in here and invite him up to the stage, as well as some of the other coaches. So Nan, come on up to the stage. If you got your mic, guys, anyone else in here, make sure your mic is working, and we can invite you up to the stage, and you guys can partake in the tell us about your trade and what you're looking at and how we can help you. All right. So let's see. Okay, we got Robert in here, and Nan. So would love to get you up here on the stage. In the meantime, David, go for it,
Sure.
And we'll just jump in.
Definitely. Good morning, good evening, good afternoon, traders. Great to be joining you all again on Thursday. So thanks for the invite, Bruce. I've got a couple of trades here from Nan. I've got an ES trade, and I've got a Russell trade. A lot of focus on ORB, so music to my ears. As you know, Bruce, I like to talk about ORB, and also very simple but effective deadly trading that we're seeing here. So the first chart, Bruce, that's in front of us here, we've got the box, which is the opening range in the top left, and he's eyeing that price. We had I'm going to say, I might be sort of using a crowbar on it. We had a similar today, although it was a bit shorter in the upper range, where you've got the upper liquidity, as we can see, Bruce, that is fairly sort of thick. Yep. The price, you've got the opening range. The price just bounces around, and as you all know, I mark first minute M1 as my opening range. So it's good to see that sort of action in place here by Nan. The price then fails, trying to get back above that box area, Bruce. We've got some thickening of the upper liquidity coming in, and then the price scoots down very, very aggressively. A typical sort of move that we see. I also describe these, Bruce, as a sucker's punch. And you hear me also say it frequently. It's a price gouge. They take the price up, or they take it down for that gouge, and then it can be 5, 10, 15 minutes into the cash market, and then the price goes off in the opposite direction, just as it did today. And that's what we've got here, Bruce. We have that sort of 10, 15 minutes, and it breaks down from that structure as he's calling out, and it starts to scoot down. You also see at the same time that growing lower liquidity on the book. That's the one which is giving you a little bit of a direction of travel, and at the same time the liquidity further up is starting to fade off a bit. Classic show and tell in terms of what is going on. Then we get the pull up from that liquidity, quite an aggressive pull up from the liquidity. I've got to be honest, Bruce, at that sort of 950. Yeah, that's it. That quite aggressive pull up. Not going to try and throw that under the bus of low volume pullback, and it comes up above the ORB, which is slightly unique to what, let's say, I would like to see. I don't mind it coming up to the lower ORB, that lower box, but here it's just broken that area, and then down she goes, and that's where Nana's got in. And he's getting in that very aggressive pickup in volume, as we see, which is round about, I'm going to say 957, 958. That's it. Yeah, yeah. Lovely focus on that. Lovely focus on the volume bars, as seen. My tip on there, and we have that with like DNT and others. Some of us pull the volume bars, Bruce, literally halfway up your chart. we can't miss them. So that's what I'd be suggesting there. What I'd like to know a little bit about on this trade, really, please, is, was this a market entry? Did you use a stop or a limit entry, or whatever you did? Where your stop was? Did you place it into the ORB box? Did you trail the stop on the way down? Your exit is clearly marked. We can see that, Bruce, on the bottom right, when the buying volume's picking up, and that sell down has just started to sort of fade away. That's it. Yeah, fade away. And I'm sure lots of people, including myself today, were looking for, is that going to happen today? But as you said, Bruce, it didn't. It was just relentless.
Yeah.
I've really rambled on there, Bruce, but hopefully gives you it's really simple. This is the thing. It really is very a simple, effective use of the opening range, keeping an eye on that, knowing the levels, looking at liquidity, looking at those volume bars, that VPA, that volume price analysis that really can give you a good heads up as to where price is going, and bang, you can make some decent greenery here.
Yeah. Nan, I don't know if you got a mic or not, but I just re-invited you up to the stage here. We got John. Welcome, John. Just entered into the room here.
Excellent.
No, you're not rambling at all, David. You're just going through the mechanics of the trade, and
yeah, thanks.
There is. I just want to, just so I don't forget. Guys, this is covered. Actually, this is the 15-minute opening range breakout. It is covered here in the, if you go down in the supply and demand setups in here, we have an ORB trade right here, one of the last ones.
Beautiful.
Right? So it's like you said, David, it's super simple. I mean, it doesn't get much easier for a trade setup. There can be substantial risk involved. But when you catch something like this, it's like it really pays for itself. And
it's that, sorry to cut in, it's that, I know I'm always talking about time of day, but that early market, cash market, old school, floor trading, it's all gone, David. It's showing your age. But they've tried to take the price up. There's the liquidity as a signal. It's failed. And if you were, as you do on your webbies, you probably zoom into that in the micro stretch. You can see that sort of like, lower high pattern coming in, and then the volume's picking up. And we should throw the mic to John, because he'd be all over this liquidity. But yeah, it's very simple, Bruce.
Yeah.
Really simple.
Yeah. Agreed. John, please.
Sure. Well, as David, it is a straightforward trade. And one of the things that I would just add is that as the trade was progressing down, liquidity was being added. And liquidity was being faded above the market. It's up at 60, 65, that's starting to fade away. So the balance, or the imbalance, begins to continue to build to the downside. So if you're holding that really gives you some nice clues to hold on for the longer run. And that's what I love about the heat map, is that you can get a sense as to what the overall intent is, and just walked it right down. I think it's a beautiful trade, and like you say, pretty straightforward as far as the entry as to what to look for. And you can see where early on they were baiting your hook a little bit up there at 60 and 65, and then it failed. And
you did.
and I'm sure there's a few stop runs up there, and and buy sweeps. But yes, very nice, very nicely done. And the liquidity guided it the whole way, along with the building of the volume. It's all red dots. All
Yeah,
red
it
dots
is.
coming down. Very, very much trading on the bid, and that's what you like to see.
Yeah.
Nicely done.
Yeah, great. And Robert, great to have you, both you and John, back again.
Definitely.
Robert, please jump in and give us your insights.
Hello, everybody. Nice. Maybe I've got technical question because I'm the new quite new coach. Do we have access to this materials area to be prepared a little bit more?
I'm sorry.
Just a question.
Say again.
Do we have the access to this materials on such our webinars area for me to be prepared, because I'm I'm answering after the more experienced coaches, so they explain almost everything. Even if I would like to say something, generally I'm repeating. So
Okay.
maybe I would like to or comment on the beginning, because I know less, and later they will they will give more information to the audience.
Okay.
So
Okay.
is
Yeah.
it possible
What
for me to
it,
get this information, let's say a few hours later, before, sorry, before
yeah, we could probably do that.
it would?
It's really kind of hit and miss though, Robert, to be honest, because if Nan wasn't in here, maybe
Uh-huh.
we wouldn't cover it. So maybe
Okay,
we would
okay.
cover someone else. So I mean, the whole goal is to try to open the mic for to hear them, not us.
Okay, okay.
you know.
So maybe I will try. As you can hear, probably my English is not so very good, so I have some problems with communication. So what can I say? I can see the opening range. I can see the break of opening range to certain level to the liquidity pullback. Also to the area of this range. It's not in the rectangle, but this is the same range of the opening range. And the price continued in the direction of the breakout. Yes, and we've got the entry. The our trader noticed the aggressive volume, aggressive sellers. This sell was supported by volume delta. At the bottom of the page, we can see the candle of the volume, and the price moved down with the aggressors. So very nice move, and exit like the beginning of the next TLBA trade. So when the buying aggressors appeared it was also with the aggressive buyers, and confirmed by volume delta. It was clear that he has to get out. So this is what I see.
Yeah. A really nice point, Robert, because here, there's the potential right in here for another move right back up to here. But like you said, here's the reaction. Here's the buying reaction after that, and then it curls around, and you see more selling coming in. This is going to go. It's more likely it's going to go. We've got this move, and we're looking for this move. That's
It's like what one.
Yeah, because there's high liquidity here, and it transacted, and there's probably, if you zoom in at a certain point, like this can be confusing with that trend line break and accumulation, because you might see it and you might start to see, oh, okay, they're starting to come in, and like you get in, and then you just get hammered, right?
Yeah.
So you gotta be kind of careful with some of these things, time of day as well, look at the bigger kind of impulse moves, and yeah, it can be tricky. But when you really start to see this start to happen, like, it's more or less telegraphing that it wants to go low.
Yes.
So
Yeah.
the there's some nice stuff up here, I feel, as well. Like, yeah, okay, high liquidity, high liquidity, high liquidity, but look at this huge spoof here. And no one, I mean, okay, we get a little bit of a bounce here. It doesn't trade it though. Those guys pull. Sellers come in hard here. You would look for it to definitely trade back down to this liquidity. I would. And then this is where Nan did a really good job, because he's mixing in, I think, two really important factors: time of day, and then the kind of context here in the range.
Right.
This is exactly what the ORB and Bookmap combined can really help with. So it's a beautiful notice of that, knowing your pattern, and mixing it with the time of day, and then grabbing a great move out of it. So let's see. Is that it? That's all we got here, I think.
That is on that one. There was a Russell trade below that, but if I can send you to the chat, Bruce, to pick up my Bookmap chart from today. I'm not looking to talk much beyond it, except it's really what we've just talked here. So as Stephen rightly points out, these things, sure, Captain Hindsight, Monday morning quarterbacks, us ladies, all the rest. But a similar sort of picture, and I know John will be all over this like a rash, John. You got that upper liquidity, you got plenty of red volume bars. 1430 here is the cash open. They're trying to drive it up into it, doesn't really get into it, and then suddenly, bang, it's selling. And of course, if I put up an options chart, Bruce, you'd see a similar brutal sort of sell-off. But yeah, I know it's Captain Hindsight, but yeah.
But you're spot on though. Like, you're looking at what your point was, like the similarities though, right?
Yeah, it is. That's
right?
it.
So I mean,
ORB,
just look at that. Like, look at that selling coming in, just like what Nan had noticed as well, and called out, same over here. It's hard to kind of see some of the stuff that might have unfolded in here, but it broke this little range, and then that's a lot of selling down here.
Oh, huge.
So
really,
it took some time here, but once it got going, boy, it all day long basically. So
is that VWAP in there, David, that you're plotting along with the POC?
It is, sir. It is indeed. Yeah.
Okay, so this is your POC. This is your VWAP.
Yeah, VWAP is green.
Okay.
Yeah.
Okay.
VWAP was good this morning, John, as if you were trading in the.
I wasn't there, but yes, I do enjoy the VWAP. I don't do the standard deviation, except for the 2R. I do that, but I do focus in on the VWAP. Yes, but I see the POC was a great guide there as well. Bookmap does a great job with that. I need to study that a bit more, but every time I look at it, it's like, boy, I really need to do a deep dive into that, because whoever did that really did a pretty good job.
Yeah, and the option levels were pretty good today as well. In terms of as a bumper bar, Bruce, we've got through that one. Are we going down to the next one? Then looking at the various maps that we see on options to sort of give you confidence that this is going down. But yeah, the chart tells you that. That's the thing.
Yeah, most important is the vol trigger there. If it breaks that, it's going to go. That's like a line in the sand. And
yes. It didn't spend much time at VT today.
Right. Yeah. Nice job. Really nice.
Yeah, it's funny. I mean, it's trending so hard that the POC looks like it's the VWAP,
Right. Yeah.
that you don't see that every day.
Right. No.
But anyway, No, great, David. Great. Like
Yeah.
again, like these things repeat,
They do.
and
They do.
that's your big point here.
Mhm.
That
Yeah,
trade looks a lot like today's
it
trade.
does. It does. It does for
Mhm.
sure.
Yeah, yeah.
Very nice.
Okay, all right. So let's see, and let's move on. You got something else in here, I think.
Yeah, we can probably pass of that unless we can get Nan onto the mic. He's done a similar trade on the Russell.
This one
You're still
down
trading the Russell,
down
yeah,
here. Okay.
which I know John likes to play in
Yeah.
the Russell as well.
Yep.
Similar sort of thing. ORB breakdown, volumes on your side. Doesn't quite pull up like it does. There's the lower target liquidity coming in. Bang, off he goes. Yeah,
Mhm.
rinse
Mhm.
and repeat.
Yeah, yeah.
A little less drama on the Russell. I like it.
Yes, yeah. I must
Yeah.
get back to it, actually. I used to trade
Yeah,
that quite a
yeah.
yeah.
But the liquidity has been nice, David. I do it. I haven't been
Okay.
doing a lot of trading, but when I
Yeah.
do look at it, it's a little tighter. You're not going to get those wide swings from the high cap stocks because there aren't any,
Good.
And
No.
it's like I said, it can go, and when
Yeah.
it gets going, it trends very nice
Yeah,
without a lot of bumps
yeah.
and bruises like you find in the Nasdaq.
Perfect. And are you looking at some the IWM
Yeah,
as a you are? Yeah. Okay. That's the option, guys,
yeah, yeah.
for the
Yeah,
Russell.
I key off the option levels on
Yeah.
IWM. Yep.
Okay.
Um, yeah, no, I absolutely agree. Like with you, John. Like, I mean, this thing always Russell kind of for some reason always reminds me of the Heikinashi bars. Like because once it starts trending, it just
Yeah.
keeps going. It's
Yeah.
like red bar, red bar, red bar, red bar.
Yeah.
One after another.
Yep.
And yeah, they can be some really, really, really nice moves.
Mhm.
Let's see, Nan. Oh, you texted in here. You're welcome for the feedback. Just wondering about stop placement on the ORB trade and some of the trade management, uh, and and then maybe a bit of a discussion with the coaches here because that's a big topic for this trade.
Mm.
And there you can put a lot of risk on here and get really hurt
Yep.
several times before, and then you might be shy to take this one, and then maybe you miss it, or you take your profit down here when it trends hard the rest of the day, and then you're at a loss on the overall. So I mean the trade setup, you're looking for the break of a specific range of high volume and that opening range, and then when it breaks, it's supposed to go. So you sell the breakdown here, you put your stop up here, and that's it. Put your target like way down here, I guess. But if this does another rotation and knocks you out and then comes back down and does it again or whatever, I mean there's a lot of I mean that's like from 60 on up to 80 up here. It can really hurt. So I don't know, David, if you want to comment on that since you trade this quite a bit.
I not a lot to add really, to be fair, Bruce. Yeah, but I am tomorrow. I'm going to pull up a Russell chart and start having a go at that because I used to. Yeah, I missed that.
Okay.
Yeah.
Yeah. I mean, I was, when I did that video, I was like, well, God, what should I mention? Like, you can be more aggressive with your trade management, but it's like, no, these are the mechanics of the trade in the setup, and it's a range. You're looking for the break and stop above the range.
That's it.
So anyway, I don't know if John or Robert have any comments on that.
Nothing additional here.
Okay.
I think you covered.
Maybe if we will see the pullback after the breakout, maybe I would definitely move the stop lower over the pivot of somewhere here. Yeah, but after the pullback. Yeah, if you have the pullback, I would try to move it lower as you know as you marked.
Yeah, that's actually a good idea. It's too bad Trading's Life isn't in here because this, not this setup here, but the one previously, it gave you that pullback here.
It did.
Yeah.
Yeah.
It's kind of dicey to take. I kind of feel because the volume's picking up and it came all the way back here.
And it went above the ORB.
And I don't see a lot of selling in here, but man, do you get it down here?
Yeah.
Anyway,
yeah. I can lean you into chat again, Bruce.
Okay.
Please.
Yep.
So this is very colorful. I say my familiar tick charts that you've seen over the, dare I say, years, Bruce? So the horizontal green crocodile teeth is my first minute ORB. Again, it's UK time, 14:30. We start. We can see how the price broke above that ORB as a commentary, and then it fails, and then it sells down quickly. And as I said earlier on, Bruce, where it's coming back up and clipping the lower crocodile teeth here, it just got just above at 14.47, but after that the selling is relentless, and the lower part of my chart, which is my cumulative delta, but it's filtered, it's only picking up large traders, and all the various bubbles, round circles you've got. This is a hybrid chart that I've been working on some of the feedback traders you've been giving, looking at MES versus ES. So on this chart, Bruce, you've got this is that Japanese thing you said, the Heineken.
Heineken Ashi.
Yeah. So it's a Heineken Ashi. It's a Heineken Ashi. I was putting Dutch beer. It's Heineken Ashi tick chart. Most of the indicators on here are actually driven from ES, except the Heineken Ashi that is MES. The large, like say, take the minus 1023. That's a large lot that went through. So that's 1,000 lot on ES went through. So you got a feeling that we might be going a bit low if someone's dropping 1,000 lots. The smaller italic ones are MES large lot traders. So I've got another lens across what I'm trading. It's easy to say, as Stephen would say, looking at the chart, but it was quite after that failure to go up, we're going down. But you see that as clearly on Bookmap as well, Bruce.
Yeah, nice. So just multiple visualizations of it here.
That's it. Yeah.
And boy, you got a lot of stuff on here, David.
Oh yeah. Oh yeah. Oh, I've got it all. I've got it all in there. Yeah. There's the thick red line is the 200 EMA or 200 EMA. This is a Wilshire type chart, but it's on tick instead of minute. You've got the MACD, as you've all seen before. I still love my MACD, but it's mixed in with the blue lines. So that's the sort of penultimate lower one of MACD, and then it's got Chris Knox's KP2, which is to do with orders on the book coming and going. But I still feel MACD gives me a good heads up in terms of if we are overbought, oversold, or something like that. But, old school. But yeah.
Okay. Yeah. All right. Well, just kind of reconfirming what you see, and maybe kind of a little bit bigger picture, and then but then you've got elements of the order flow in here in this as well.
You do.
So,
yeah.
okay.
And what I love about the tick and I love about Bookmap is you do feel that pace. I do look at time charts, as you know, but you really get the pace, because when it's selling aggressively or buying aggressively, that pace of action you feel on a tick chart because it just moves.
Yeah.
And this is quite quick. This is 222 ticks. So it's pretty quick.
Yeah.
So is that a 1 minute ORB?
That's and that comes off which I'm trying to think of the name of the indicator. Up down indicators is what I run on Ninja. So it prints it automatically. Yeah.
Oh, nice.
Yeah.
Okay. Let's see. Let's move on, and so we went over both of nons, and I don't know about this one. Is there anything you wanted to mention on this, David?
No, that's the Russell one. So I think we've kindly covered that.
Okay.
ORB
Okay. I
trading.
see. Yeah, I see. I see. He's just showing the overnight and then previous day here.
Yeah,
Got you.
yeah, the volume profile, session volume profile of.
This is a beautiful one. I mean, like, you know, look at this. I mean, talk about, you know, some of the themes we talk about over and over again. Look at trap traders up in here. And you know, moving away. And this is after, you know, a pretty volatile day yesterday after non-farm. And at least in my, I mean, it didn't. I mean, it chopped around a lot, but it had a negative slant to it for sure. And then anyway, you know, boy, this is quite a nice trap to set, and then just move it away and just grind people out.
Yeah.
It's brutal.
It is. I'm trying to think of the name of some traders. Maybe in the chat you might be able to help me. So many years ago, I used to join a trading room of some guys out of Oklahoma, and they would just trade the gold open, the oil open, and then they just trade the first 30-40 minutes, Bruce, of this to essentially play ORB. Because of that big struggle you get early on, and you can make enough handles if you know what you're doing, and that's it. You're done. Call it a day. I'm trying to think the name of the guys.
Yeah. No, I mean, boy, that's where, like, we'll talk about it more, like in the pilot program. I think I'm putting together a document for everybody for time of day and setups to trade. So you know, that way, like, you know, choose your time of day where you can focus and look for the specific setup that is more likely to unfold during that time of day because of the order flow. Or, you know, if it's an opening drive or if it's in the afternoon, you're going to be looking for either, you know, chop, mean reversion, you know, range bound type of activity potentially. You get the drift.
You do. It's so critical today. We didn't see much of a London pull up, Bruce. If we look at the chart for 11:30 your time, but still the market did flatten out, and there was some covering on those shorts. So if you're aware of that time of day, you can either pull in your stop tight, or vice versa. You might think, actually, there's going to be some chop through the London close. I'm going to widen my stop because I just feel this market's going to drop another 50 points after US lunch.
Yeah. So, I mean, this, I think that, Nan, you're on East Coast time here, right? So, yeah, I think so. Yeah, here's 9:30. Yeah. So, I mean, this really didn't get going. It chopped and chopped until it started getting going at your London close, basically.
Yeah.
And then here's your 11:30, you know, somewhere in here, right? And that's where it after that it really got going. I see that a lot, David. I mean, maybe you want to comment on that, since this is kind of your wheelhouse, because a lot of times during the webinars, like, you know, from 10 to 11:30, it's like okay, there was a great move in the morning that was kind of missed for the webinar, and then like it's just chop from 10:30 or you know, 10 to like 11 or 11:30, and then the move happens.
Well, certainly reiterating that you need to need to get that European London close out of the way for sure. And as I've mentioned before, from that sort of 11 a.m. New York time through to that 11:30 and onwards, you've got various currency fixes going on. You've got gold fixes going on. So you will get that what the hell is going on. Then from that 11:30, you're rolling into your lunchtime, Bruce, because I know, you know, like me, you're going to have a long lunch, don't you? So you're going off for your lunch, where it can be anywhere. Then the next, and this is all in Will Shire's book, as many who've read it know, It's then that post lunch that starts at 2:30. And if you look back on your charts, typically it's my 7:30 p.m. But on your 2:30 p.m. charts, Bruce, seeing that, okay, the boys and girls will come back after lunch. They're going to start now aggressively trading that into the last power hour.
Yeah, exactly. And then like when some of these other markets close, like
Yes.
and the bonds like around 3, you're just
Yes.
kind of waiting, and then like
That's it.
after all of that gets through, it's like you can see some really nice moves.
You do, and on those bond things, not things, David, bond sales, that's either at that's 1 o'clock, or is it 1 o'clock or 1:30 time, Bruce? I'm trying to think. When the bond auctions kick in, and those can have a real effect as well,
Yeah.
whether they've been oversubscribed, undersubscribed, if that's the phrase. Yeah. So
Absolutely.
all time of day, as John does as well, don't you, John?
Yep.
Guys, I'm sorry. Robert, if you have any comments, or John, want to start with Robert? Anything that you wanted to add in on this?
Uh-huh.
We kind of went off on a tangent here, so, as we do.
We do, yeah.
So anyway, time of day, Robert. Is there anything you wanted to add on that? What you find helpful for your trading?
Time of the day. Recently I started, because I'm from Europe, so I recently I was playing London Open and other things for me, like I'm in the late night in this moment, and recently I started to play your session as a main one. So I recently started to avoid a little bit as London session and focus on your opening, and even not pre-markets, but only from the beginning. And I also start to look at other things connected with the volume. So these are a lot of changes, a lot of new things for me. And for me also the very important thing is the initial balance, the first hour, first two times 30 minutes of the trade, when the big players position for the day. So it sometimes it's similar to the opening of the range, because after this 1 hour, the aggressors, if they want to hit in certain direction, we can observe this, and that's all what I wanted to say about the opening.
Okay. And John, you've been trading the London Open too, because you want to avoid the politics.
I have. Yes, I have. So almost opposite to Robert. I've been focused on that, and not so much during the day. I'm not comfortable with the risk. So yeah, I like the London Open. Yep, sure do. Yep. And there's plenty of liquidity in there, and that's usually on the ES. But yeah.
Yeah. No, I mean, I think I mean, that's really interesting, and we had really good previous conversations with you, John, on that, about time of day, and then what was happening, and then this was so disruptive for you that you're like, screw it, like I'm gonna let the U.S. session deal with the U.S. session, and what might happen there geopolitically, where I will avoid it, and trade something else at that time, which was pretty. I mean, it's a simple solution, but it's pretty unique. Most people jump to another market, and you did that as well.
Yes, I did.
But you just wanted to stay clear.
Yes, and even the stocks. That was my first move, to kind of move more towards the stocks. But the way I see them whipping around, I just I'm not comfortable with the risk. So yeah, I've been staying away from it.
Wise.
Yeah. I mean, it's interesting because like that can all of our, all your expertise for years of trading and learning, and it's unusable, you know, potentially,
Well,
for a period of time.
yeah, and I don't know when this is going to end. I don't know when the next election or what, but it just seems like every day there's just some wild stuff that's reported, and large companies, they're not able to plan. The tariffs have just been horrific for companies, but yet the market's still making higher highs. So really different personality. I'm just not familiar with it, and I'm not going to sit in there and take on a risk that I'm not comfortable with. Yeah.
Yeah, makes
Maybe.
Go ahead. I'm sorry.
No. I didn't want. He did not finish, and I started. Maybe I will wait till he will finish.
Yep, I'm done.
Okay, I said that I started to look at the US session because recently I only play S&P, and when I look at the volume traded before, especially today, I make the screenshot, and till the US opened, we had, let's say, 144,000 contracts traded. I remember the number 144,000, and now at the end of the day we had 1,987. So less than 10% of ES is together on the European session and Asian session. So the most of the volume is traded on the US session. And even if I try to look recently at the volume and at the point of control, it does not matter. It's something that we don't have to look even, because as we had not maybe usual day today, we've got completely different point of control at the end of the day. Yeah, so something has happened on the beginning of the day, and we cannot look at this because market moved down 150 points. So and what I have learned from today from David, it's very, very clever. When we've got the news on the American session, let's jump to other market. Let's play European session. It was very clever, and this is something new for me. What is very, as I said, clever, safe.
We like safeness, low risk. Bruce, can I kick you to the chat, please, and pick up the London chart, David? It's a bookmark chart. Don't worry this time. Thank you.
And David, you've been doing other markets as well, right? I mean, I know you've been doing the currency market.
Yes.
Right.
I have. Yeah, I was spending a lot of time towards the end of last year on 6B, and I think when we did the webinar last, Bruce, I was doing some 6B.
Yes.
It's often a reliable trade. It's a little bit more glacial compared to the indices. So I do yin and yang, but yeah, definitely I have been playing around with other things. I did a bit of breakfast commodities last year, bit of gold like you, John, bit of oil like you, but they're not on the charts at the moment. So yeah, I haven't been on NASDAQ for, I'm going to say, a couple of weeks. Someone might correct me wrong and put up a chart in a minute and say, no, David, you're on. So I'm just focusing on ES predominantly. Yeah. So Bruce, this is from today, just to sort of show people where we are. It's not fully bubbleized because, as you'll know, I do filter my bubbles as like a minimum trade lot. I think it's 3 or 4. I'll play around with it because I just don't like it too busy. And then a minimum volume displayed of like 13, 14, 15. Again, I'll play with the settings, Bruce, just to sort of, as you can see, this shows them when there's action and there's not action. I put down at 7 o'clock EO European Open. I appreciate we can debate about people at desks and everything else, but 7 o'clock certainly is when the European traders start coming in, and you can see straight away they're on the bid. You know, it's on the bid and it's going up, and that goes up really nicely. It carves up to a new daily high, which is that red line, Bruce. You'll know better than me. That's it. Yeah. London comes in, and then a typical trade we see in London all the time is that dog walk. Saying again quickly for dog walk, you take your dog away from your house, you go somewhere for a while, and what do? You then come back to your house. So they're going to take it. Typically, they'll take it. They might take it up. They take it down, but they're taking it down. They've taken the price down pretty quickly, and I see that also on my Ninja charts. So you've got a nice trade coming down. It's then bumping along my little line there, some various VWAPs, and then they take it back up to a new high. The dog has gone back home, Bruce, by about 10 o'clock. Yeah, goes back up to that. That's it. Thank you. It bubbles around that a fairly tight range. We drop back down. I'm going to call it a jobs number with all the dates and days changing, but it was an employment number, I think, today, Bruce, or something.
Yes.
And that was just a beautiful trade. It's off one of the VWAPs on your Bookmap chart. On my Ninja, it's on my London VWAP. Yeah. And they start bidding, and they're bidding at pace, and it goes at 15 points. And you can that line, Bruce. I was on about the DAX, how that dropped vertically down. Look at that line. That's machine-led buying. That's just going up. So you just got to join. You look at the number, the price is there, the volume's coming in. You can look at time and sales, and you just got to get along and make some money. Yeah.
Yep.
Simple. I know it's hindsight, Stephen. It is. John, help me. You trade this like me.
We see it all the time. Absolutely.
We do.
Yeah.
We do.
We see it all the time. Trail your stop real close, or as soon as it starts to hesitate, or when you get to liquidity. Absolutely. Yeah. This is a bread and butter trade.
It is. And what I really want to do is just do what you do, John. Just trade ETH and go home, so to speak, after that.
There's plenty there. There's plenty there.
There is. That's a simple.
Try to get avoid to get beat up during the time where all different hands start playing the market, and my goodness, it's just a mess.
You can live like a pig on 15 handles, says me.
Yes, absolutely.
Yeah. And you see me often type, I say to Brent, "Can I go home now, Brent?" You see me pretty disgusted.
Yeah.
Yeah. So there you go, Robert. There's today for London.
Robert,
more pedestrian.
Yes.
Any comments on?
No. About overtrading, I sometimes feel that I'm sitting a little bit too much in front of the computer. So maybe I would have to choose a little bit what to do the best, how to organize my time, because sometimes I started to feel the overtrading.
Yeah.
Maybe. I mean, so what? I mean, David. I'm going to kind of summarize here, but what you're covering here is a kind of a range in here, right?
Yes.
But what you're really covering is it's a news trade. It's a fundamental trade.
Today was
and you're looking for this quick move. You're looking for fuel, people short.
Yes.
And you're just you want to get out at maybe highs or liquidity levels, and that's it. I mean, look at the angle on this thing.
Beautiful, isn't it?
And it just comes right back down. So things like this, and this is a weekly number. I mean, it's not that important of a number, but you're getting a big reaction though.
Yes.
And that can be, so you'd have to have your own kind of setup for this. And David, this is perfect for you.
It is.
You're just looking for those volume dots to come in, and you're getting in, and you're getting in, and you're getting out.
Right, he's scaling. Absolutely.
Yeah.
So he has his ATM set, and he's scaling, and yeah, absolutely.
And then you're done. I mean, that's the beauty of trading the news type of stuff, or the fundamentals.
Yes.
Now guys, for those of you, we're as you know, with the pilot program or in the webinars, we're bringing more of the fundamentals in, because the context is just so key. I mean, everything's not just technical. It's we need to understand and put into context the fundamentals. And then when you see some of these news trades as well, like with some technicals. There's some things in here, I mean, this is all going to be trapped in here. People are looking for, and they're thinking, because of the non-farm yesterday, that we're probably going to have a bad number, or I don't know, whatever it is, it's a pretty nasty move.
Yes.
But
Yeah.
anyway, having some sort of kind of insight or what you're looking for, and these can be extremely profitable,
Safe.
and you're out.
You're out. Because you used to trade Forex, I know, Bruce, and
Yeah.
I'm trying to think of the full name of it. I mean, Forex trading, certainly when I used to Forex trade, was very much more about the news, because that was the event in the day, or during the day. There's some good simple books. I may have the name wrong. It's by a trader, a lady called Kathy Lean. I'm looking on my shelf behind to see if I can see it.
Yeah, she's in biz for a long time.
Yeah, and you open those books, and I'll exaggerate, half the book is about how to trade the news, whereas in a futures ES Nasdaq, there's might be 1 or 2 pages, says me.
Yeah. There's so much, and people are scared. I find, like, they're kind of nervous, or they don't know about the fundamentals, and they're pretty simple, though. I mean, it's pretty straightforward. Get a feel for it and integrate it in, and then when you see things like anomalies like this in here, you're in, and boy, I mean, you're out really quick too.
Yeah.
And you're like, well, I didn't even work for it today, and I didn't even feel the stress,
No stress on that one.
and
No.
you're out, and then it's just like, well, okay, I just turn the machines off, So
Yeah, I mean,
anyway.
you can use the calendar to plan your participation, because it's just not realistic to think that you can sit there concentrated for 6 to 8 hours
No,
during a trading
that's right.
session. You must pick the times in which you're going to battle this thing. That's why I like the London Open. I know when that is. I'm up an hour before then. I'm geared up, ready to go, and yeah, and then I'm not going to sit there for much longer than the Open, or for an hour or so. And so with these news events, you can, like I said, you can budget your time pretty effectively by trading around those areas, and then just relax a bit, because like I said, I don't think it's realistic to sit there on the
It's
edge
not,
of your
no.
seat for 6 hours. No way.
No way.
You're just going to lose your concentration.
Yeah, absolutely. And just be exhausted too.
Yeah, make mistakes, and yeah.
Yeah, exactly. Robert, any insights or comments?
No, you're asking me, not more.
I'm sorry.
No. I've got nothing to say.
Okay. So anyway, guys, we'll cover more and more about this. Like as you know, we have about the impetus, what moves the markets, etc., and then diving deeper into that. And it's not really a bias that we're looking for, but it is like it's just an understanding of things. And then the number, it's not really the number either, it's the reaction to the number that we want to understand. If you maybe let's suppose, like, there's just no one interested in selling, like down here, or they've sold, but it comes back up in here, and they're not interested in selling again. I mean, look out. These kinds of squeezes can happen really, really quickly. So anyway, so it's really putting that kind of context together, where it can be kind of tricky. You're like, well, the news was great, it should go up, and it doesn't. You got to kind of that's where you got to really kind of focus. Other times,
that's where I think the chart takes precedence, because sometimes the action, it doesn't make sense to what the news is reported, or at least to me, because I don't understand a lot of it. So that's why the charts are paramount. and the liquidity and the volume.
Yeah.
And then the rest of it is just outside my domain. I let it stay out there. Yeah.
Absolutely.
Maybe I will ask the question. This is the bookmap chart without the price line.
Yes. Yeah.
And why the price is removed? It's not necessary.
David?
How to technically observe this such a market? Because I'm interested. How do you use
Yeah,
this?
sure. So what you're seeing there is, as I mentioned, I get at my settings on this one. I adjust the heat map settings in terms
Okay.
of I don't want to see too many bubbles. Now,
So,
Okay.
what you're seeing there is also RTH settings.
Okay.
So in the morning, it was probably something slightly different. I toggle that around quite a lot, gotta say. So you'll all know the box, Bruce, but I'll do a quick screenshot of it. So that is running at, I was fairly close. Minimum trade of 3 and a volume of 14. But I that's not set in stone. I will play with it to get the right sort of visual, because I just don't like seeing too many bubbles, says me. I just want to sort of see some of the larger trades going through, Bruce.
okay.
About not so many bubbles, I understand, but
Yeah.
I cannot imagine to wait, not seeing the price line.
Okay.
You've got the price on the other screens, yeah?
I do, but of course, on a live chart, I've got the price on the far right-hand side, haven't I? So within the small trading column, the invisible trading column. So I do see the price on that, but yeah, I've got my ninja charts running. But I only use one screen, as I've said.
Okay.
These are some pretty, I mean, for the pre-market, these are some pretty big filters. So you're not gonna you're gonna filter out quite a bit.
Yeah.
So,
but as you can see on that screenshot, it really tells you when, as John's on about, time to wake up, David. Trying to pay attention. Wheat and chaff, sort the noise out.
yeah.
David, do you know off the top of your head what value you use for the NQ?
I don't. It's a lot less. It is less.
Okay.
Let's have a little look. Let me get that up. Yeah, sadly it's often in really single digits. Have a look for NQ. My NQ volume dots at the moment is 2 and 5. Do a screenshot.
Right. Yeah. Interesting.
I know I'm laboring the point. There's no science to it. It's a visual thinking.
Sure.
Damn, that chart's a bit busy, or it's a bit skinny. I better, fiddle around with it. So, but I find it helps me. It does help me, for sure. Particularly on a day like today, where there's a lot going through. Think, hang on, I just want to see the bigger traders going through. And as you've seen on my busy Picasso Ninja chart, I've also got then the large lot traders that get printed onto the, onto the screen.
Okay, thank you.
Welcome.
This is NQ. Yeah. Okay.
That's NQ. Yeah, 2 and 5.
Yeah.
2 and 5. Interesting. I'm gonna look at that. Excellent.
Welcome.
That's a nice thing about coming in here. You always pick up bits and pieces that you can try and learn from.
Oh, we do.
Wonderful.
That's
do.
absolutely why we're here.
We do.
Yeah.
And I've said it a few times, Bruce. It's from you, John, because you pulled me aside a good few times about, not necessarily swearing as much as I do, but WTF are you using market orders for, David? Use some limit orders. And I'm doing that a lot more now with my DOM on the far right-hand side. And I was talking to Wing Girl Laura the other day about this, Bruce. When the price is moving, look at your DOM, go down X number of points handles, stick a limit order in there. You're still going to get in, but you're in a much better price. So that's down to John. Every day's a school day. We'll share it. It's great.
Well, I mean, you're putting a limit order on the best bid, though, right? Is that?
Yeah.
Okay.
Yeah.
Okay.
Yeah.
Yeah. I mean, you can still be left behind, but with the ES, you'll likely get filled. I mean,
yes.
But
the way these markets are whipping around, there's a good chance I think you're going to get filled.
Yeah. I agree.
Taking that the urgent, frantic get in, because then you're getting in with all the stops.
Yeah.
You don't want to do that.
Yes.
Yeah, exactly. Okay, let's see. I think we covered Yunnan pretty well.
Definitely.
So let's
Yeah,
move
welcome,
on.
welcome, Dan. Good to see you.
Yeah, and great stuff there. That was good examples. It shows that you know what you're looking for. You managed it well. You pretty much got it down there. So some great stuff there. Let's see. Who else do we have here? Laura is not in here.
She's not. She's got an early night win, girl. She's up early tomorrow, she was saying.
Okay. Let's see, David, you also had Daniel Rue, so let's cue him up here, and let's go through some of his charts here. He's been doing some great work as well.
Yes.
So take it away, David.
Yeah, sure. So we've got a couple of trades here, Bruce, from Daniel. We've got an ES1 and we've got a gold trade, which is good. Again, I know I keep saying the same phrase, was really simple kiss trading. The trade here is what we see all the time, as we talked about just before the webinar started, Bruce, continual BTD, buy that dip or whatever other expletive we want to put into it. We've got a price scoop down, as we can see, 11 o'clock. It's selling. That sell down very much like we saw a minute ago on my news trade, but we're selling until we're buying. You've got some liquidity there in gray at the 54 area that disappears. Spoof, that deep liquidity, just gone. See that a lot in ETH, don't we, John? That's gone.
Yeah. Yep.
In comes the buying, in comes that buying, bang. It's really clear let's say we're going back up. We've also got new liquidity. Thank you, Bruce. You're on it already around that 63, 64 level. We've got new liquidity coming in a little bit later. And then he's doing the entry on that little box. You can see where he's got the little entry. Price is pulled up. It then comes back down. That might be a low volume, something, I'm not sure. And then he gets in, which Tom always talks about taking those sort of trades, and then off he goes. He knows where his exit's going to be. Yeah, very, 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 very simple trade. Would like to understand, as we say, Bruce, in terms of type of entry, bit of checklisting, how you played the stops, anything like that would be useful to know about, really, trade management, I guess. But this trade falls under my phrase. You've seen it many times, John. It's that styrofoam. Price goes down. We know with certainty, except today, David, the price comes back up. It's 101 trading. Easy to do. Yeah. And he's on European time here, by the way. He's on Europe. So this is my bad. This is an ETH trade. Yeah. That's all I can add, really, Bruce. I'm going to throw it out to John. John, please.
Look how they pulled that liquidity.
My
God. I thought that was supposed to be illegal, David.
No, not anymore.
Somebody ought to be in jail for that. Look at that.
I know.
It's sinister.
It is, and it can be massive. You saw it, Bruce, a few weeks ago. It was like 1,000 or something. And that's ETH. It is criminal.
Yeah. So he did a nice job reading this. Both on the entry, identifying the structure with the volume, buying the break. Actually, I think he bought the pullback, which was wonderful. And then he had his sights on the liquidity above. That's a great use of Bookmap. He's putting the pieces together of the read. And that's the part you can't teach. Somebody has to sit there and assemble all the components together to make this trade. So he's doing a great job.
Yeah, perfect trade. Perfect ETH trading, Bruce.
Yeah.
All comes from great instruction. So go ahead, Bruce.
Yeah, this is. I mean, he's also. I think there's. I wish. Sometimes he's in here, sometimes he's not. But he's really looking at this, I believe, as well with the market pulse. He's he's noticing, especially you can just see it down in here, like really overextended market pulse. And then he sees quite a bit of buying coming in, this cluster of buying like this coming in. So here's your aggressive accumulation, he gets a real nice pullback on that. And you're not looking for much on something like this. I mean, this is a big impulse move here. Now, it's not a whole lot of volume on it, but there certainly is a lot of buy volume. And that's what, so he's got overextended plus a lot of buy volume.
Buy volume, yeah.
Right? So those two things together is target your high liquidity up here. Right? And he's got POC as well. So, he's got some technicals in here as well as order flow. He's just looking to scalp it up to here. That's a nice one. I mean, personally, like, I've been burned on these so many times. Like, I would be moving my stop up if I was looking for a bigger move up into like here or above. Like, you can see the 69 liquidity coming in up here, right? I don't know. Maybe it did, but because boy, this is a lot of buying here. Maybe it did, but these kinds of things, like, I don't know. I get caught up in them, and then it does this, and then it just does that, but this is really tight. He's got it overextended. He's got his accumulation here. He doesn't see much selling down here, and then entry, target, POC, liquidity, done deal. Nice little scalp. And good for 57 on up to 63. So 6 points. That's a nice little trade.
My tip on these, Bruce, instead of being sort of like ready, aim, fire, if you're on the rifle range at US range, this is when you've got to go fire, aim, ready. Otherwise, you'll do exactly what you said. If you hesitate, the price starts to move. Okay, I get in now, and that might be at sort of like 58, 59. Then you're in the chop, and then you're thinking, oh damn, am I going to get out break even? You've just got to pull the trigger. Easy to say, yeah.
Yeah, absolutely. I mean, David, I think that maybe gets back to a point where, like, like this pilot program, is we train on the setup over and over and over again. You should know your setup. You've got to know your setup. You got to know what it looks like. When you do, and then it presents, it's easy. It's easier.
Yes.
Put it that way. It's like, oh well, it's presenting. I should get in. And you know where to place your stop. You know where to take your target. Done deal. Look for the next one.
Yeah, very true.
Okay.
These happen all day long, so to speak.
Yeah. Oh, yeah. I mean, and on multiple time frames. So all sorts of things that you could be looking for. Let's see. John.
Oh, I'm sorry.
John, I was just about to turn it over to you.
You were okay. I respect the work that's been done on the market pulse, but I don't see anything in here that would enhance my read that I'm not getting from the main chart. Because if you look at that market pulse earlier, you could make a case for the market being overextended to the downside, over to the left, but it was within a range. So when I make a case for overextended, you're looking for that big move down to that spoofing. So like I said, I respect the work that's been done, but I've never found it to give me some additional context that I can't see on the main chart. So what am I missing with that market pulse?
I think, the short answer from at least my side, John, would be like what I think is a really beautiful thing with market pulse is this subchart here. Because then you can go back, like you just said, and you can go back and just visually, just for the day, like, okay, yeah, did I get good signals in here? This was all pulled here, which is a pity, but that's a nice context, That
Right.
aggressive buying after that, that's kind of an odd combination.
See, that's what I see. I see the liquidity coming off, and I see the volume coming in immediately. I know this is an inflection point. I mean, I know it immediately. I don't have to wait for the arithmetic of the market pulse to show me that. I guess that's my point. That I'm not seeing what that adds to building a case for getting long in here, because I see the liquidity getting pulled. I see the liquidity starting to building above, and volume coming into the market. I'm
Yeah.
long. Three ways I'm long, and as long as that liquidity comes in, I'm adding. I'm scaling up and moving up. And I guess that's what I was getting at. I mean, all the information I need is on that main chart, and I just was never really able to gain much. Like I said, I respect the work that was done, but just trying to squeeze my head around what does this thing do for me, and I'm not finding it as yet.
Yeah. I mean, I mean, look at all the widget he has up here for
Yeah.
Market Pulse. So, I mean, the guy loves it.
Yeah.
And he's been studying it pretty much in depth, to say the least. So, works for him.
Yeah, I'm not knocking the work. I'm just trying to put my eyeball on it and say, okay, how can this help me?
Yeah.
And I see a good case in the main chart without looking elsewhere.
Hey,
But that's my feeble-minded brain.
we'll reach out to him, and maybe he can go over like what are some of the things he looks for,
Yeah.
that might be helpful for people. So anyway, like we always say though, like John, I mean, as you know, like stops, icebergs, anything, like order flow rules first.
Yes.
These are all other confluences that go along with it to give you additional insight. And if this is what makes you feel really comfortable, and you see these other things in here, hey, great, more power to you.
Right.
So, but don't look at this and then yeah, I mean, if these things come together, yeah, it's fine. But like these things over here have to come together. Just because this happens does not mean it's going up. I think that's kind of dangerous.
Yes.
Because many times you see the extended move, a little bit of chop here, and another extended move, just like that. So that's why we just try to put the order flow pieces together as well.
Perfect.
Yes.
Yeah.
Okay. Let's see.
I use some market pulse. I'm sorry, Bruce. I've stuck it in the chat. I'm with you, John. I don't think I do. I don't have market pulse on the subchart, but I love this run-in, and this is price change and pace of tape.
Okay.
Yeah, it's the Geiger counter. That's for me. It just alerts me, and whilst I'm not trading NQ at the moment, with all the things going on, when this is going spanners, making lots of noise, and obviously that's going above my Britney Spears sort of music up, etc. I can, that's what I use it for, Bruce. I love it. I love it. Yeah.
Okay.
It gives me a feel.
Yeah, I mean the tool has really been developed to a very very in-depth and really nice level where you're using it, David. Like you got the panels, you got multi algos here. You've got your price change, but the multi algo, you can put in a whole bunch of different things in there. You can make synthetics, etc. You can make a whole system out of it if you wanted to.
Definitely.
So
I should come to some of your webbies. I should come and learn. I need to.
yeah. So anyway, okay. So let's move on here. Let's see what else that you have here, David. I think
we have a gold trade.
All right, gold has been very popular.
Yes, yeah. So the first, if you can flick to the candle chart, sorry, Bruce, first. That's the one there. And so his setup, he's looking for support and resistance as he's marked out where he's got entry 15 minutes. I'm going to say, as I know John trades this as well, this commodity can really trend at pace and it can go very quick in one direction and back in the other. It's not as choppy as ES or NQ, but I'm again happy someone can present technical information that I'm completely wrong. But it is brutal. Yeah, it's big boys trading. You can be very, very quickly down silly amounts of money, and you're looking at the chart. You think the price has hardly moved, but that's because the bars are really big. Even on the little gold, when that moves, also you can get torn one. But anyway, he's identified an area of interest for him. He's looking for a reversal. Price comes back down, and if we look at those lovely high volume bars at the bottom, Bruce, my usual line, we're selling until we're buying, and it's really clear we're buying at that level. So he's got the context of what he's looking for, albeit this is a hindsight chart. And then on his bookmap chart, he knows what he's looking for, and he trades from that level. And it's sort of like your thing, John. Yeah, I call it a binary trade. It's either going to work at that level or it's not going to work at that level. And that's what he's done. The volume on here is a little bit different to the candle chart as one would expect, but it's the same message. It's selling until it's buying, and then bang, off it goes back up to that level and breaks that level where there's liquidity. John, help me, please.
No, I agree.
Thanks, David. Bloody hell.
I'm sitting there looking at these prices. I remember it being headline news when gold broke $400 an ounce. Look at this.
Oh, I know.
God. Oh my word. It is a bit of a beast, though. Absolutely.
It is.
And you really have to be careful with your trade management, because if it does fall out against you, it can go on you. But no, this was very well planned out. Come in with volume and chase it up to liquidity. Yeah, but I think you got to trail this pretty close, because it is a bit volatile at these levels. Yeah. It's not my choice of market because I don't have the options to factor in. But yeah, exactly. But it can be a great vehicle. Absolutely. Yeah.
You, Bruce. Monday morning quarterback.
Yeah. I mean, like, this is kind of, I mean, for me at least, like, I haven't traded gold in quite a while, but like, this kind of reminds me of, like, maybe, I don't know, 2010, 12, whatever. Look at this spoofing and layering. I mean, it's just brutal,
Who cares?
and like you said, I mean, this, I mean, look at the book over here. Or no, this is volume. It's pretty thin, even, and like you said, I mean, and this thing is going to be moving some dollars here. And you can get hurt real or make a lot of money real easily. But it is. I mean, crude oil and this, like, I mean, typically you just see these kinds of just shameless spoofing. And be careful. But again, like, he's got his setup. He's looking for his volume. He's got his overextended here. He likes his market pulse. But he's got market structure too. So it broke out, pulled back, didn't go anywhere on this big volume here, and then he's overextended here, breaks above the structure, and he saw the volume on the other chart, which you don't see the volume dot here, but you see the volume bar here.
Volume bar.
Yeah. And then and he's looking for it to come back up, and he's just targeting the last swing, which is, I think, really smart. And then just get out.
Be gone. Be gone with you.
Yeah, exactly. It looks like it does a nice big kind of stop run or sweep to the upside, and I don't know what happened. Who knows what happened after that? That's what I see.
I think I'd like to come in a little later than what he did. I'd like to see that volume get taken out, get those whoever took the opposite side of that trade where that big bubble is, yeah, exactly. I'd be getting
Vomited.
along there. I want to see those guys give up. Those
Yeah.
who took the short end of that trade, I want to see those market makers give up and join in. And that's probably where we're going to be. Yeah.
Yeah, it's probably up in here, I imagine, but hard to say.
Yeah, hard to say.
Yeah.
In the chat, Bruce, I've stuck a CME page in. We've shared that one before. If as futures traders you don't know this part of the CME, do have a look. You've got all the futures in there. You can see the volume by the letters and so forth. And I look at this not quite daily, but I will be looking at gold, oil, etc., just to see if there's something picking up in a particular contract that's not on my chart. And I do suggest if you are trading gold, oil, have multiple contracts up, because you will see some things, let's say here on the June contract, that you will not see on the April contract. But look at the volume. It's not some of this contracts.
It's the weirdest thing. I don't, it doesn't respect the months. It kind of goes to goofy months. I don't know why. I'm sure someone could tell me, but like, I don't get it. But the Feb, it was the Feb contract, and like people were all over that, and the G contract here. Guys, just a quick note on the new Bookmap 7.7 version that has the continuous contract. You have to kind of double check on some of these things though, because like the continuous contract is always, the way we've got it set up, is going to go to the next month. It's not going to be respected here. We're not scraping the CME group website here and going, oh, clearly it's the April contract. We will be going with the March we'd be going with the February contract still. When you plug in GC with Bookmap data, it's Bookmap data, and you put in GC input GC, it'll come up with GCG6, and that is not traded anymore.
No.
You got to jump over to the April one. So just like you said, David, this is the way to go. I think just do a quick search, a Google search, CME GC volume or something, and it'll tell you. It's nice how they do this now too. They didn't do this like a year ago or so. They
you had to look up the calendar as well, didn't you?
You had to go and check it out yourself on the quote, or here, open volume, open interest. Anyway, thanks for that, David.
Welcome.
So okay, let's see. Is there anything else on Daniel here? I think that was it, right? Yeah. So, okay. Let's see. Nadia is in here. Nadia, we've got some content for you.
Nice.
Let's jump in. Nadia, you've been doing some great work as well. And amazing, like how you are rather new to trading, and the diligence and the work you're putting in, and the payoff that you're getting. Really kudos to you, and keep it up. And you're asking the right questions. You're doing the right work. And here's one of your trades right here. So let's bring you up to the stage. Our first one up to the stage tonight.
She's just typed, I cannot talk.
Oh no!
Oh, denied.
Oh, denied. Okay. That's a pity. It's so much better when people can come up and speak. That's what
she's at work.
The whole thing is about here. It looks like she's got a couple of glasses of wine in her, maybe. Oh no, that's you and Steven. Okay, got you. Responding. I was okay, understood. All right. Anyway, let's take a look at this. So how much time? So it's not, we don't have a lot of time in here. 1610, 1615, 1620. You're doing the trend line break accumulation. You got your checklist up here. You graded it. I don't know if this was enough here probably wouldn't be enough to take the trade, Nadia, just because of the higher time frame key level here. But we mentioned this in the webinar the other day. You can take these, or it. Let's put it this way. It's not about taking these. It's about understanding the context of them. So because you know, it was a lot of traders were coming in and just looking and being so like kind of tightly wrapped about like, okay, I got to see like 3 levels of you know, passive accumulation. It has to be 3, and you know, okay, I mean that's great, but it's really about just understanding passive buying, understanding that, you know, they're getting, these are buyers, they're getting filled, they're absorbing selling pressure. If they're absorbing selling pressure and you don't get more sellers at a level where you're looking for something to happen anyway, then we're looking for structure to break. And we're looking for aggressors to come in. And she identified really nicely in here with the aggressive accumulation. That's kind of a beauty, I think, right there. And then she's got a beautiful entry here, you know, waiting for it. And it comes back up. There's some volume on it. And I love that she just, you know, she takes her profit right away. It's a lower time frame trade. These are 5 minutes between each vertical dotted line. You see something like this, there's maybe it's not a key level, maybe it's not 3 levels here of accumulation, but you understand the concept and you're not looking for a big move here. So take the scalp, get out, look for the next. You just built some more confidence in your trading. That's the way I kind of look at it. I know you're kind of breaking the setup rules, kind of, but you're understanding the context of them. All right, that's my say. Turn it over to you, John, and then looks like, oh, David, we lost him, and we'll bring him back up on stage here.
Okay.
Perfect. Welcome back.
Okay. All right. No, I concur. I think she showed great poise in entering where she did, and I think it was the right place to enter. She wanted to see volume come in, and when it broke the structure, she got long. You can make a living off of 5 handles, so it was a nice way to take the target. But most importantly, she waited until she got that break because you still have liquidity below. You still have the possibility this market could go down there and chase that liquidity at 60. But it became clear with the volume that it was going to break higher. And now I agree. I don't have anything to add than what you said, Bruce. I thought it was well done. And nothing wrong with taking 5 handles at all.
Echo that. Yeah. Big time.
Yeah.
Big time.
Yeah.
Big time.
Beautiful
trading.
Didn't feel any heat at all. Great stop placement. And she can bring that stop up as the volume comes into the market. Yeah, very nicely done. Yep.
Yeah, beauty. Let's see. Robert, this is in your wheelhouse, so let's get your insight.
Yeah. Yes. So I like this trade. As a matter of fact, you said that, and she also not put attention to the. Oh, sorry. I can see that we had the support from passive liquidity from the beginning. So it was also quite strong signal to have some kind of key level. We generally look for other type of key levels, or probably should mention, but it's not a problem if we can see such a strong level as we can see from the left side on the bottom. I think we can use it. So this passive support was very, very strong, and she noticed the trend. The trend was forming. She noticed the passive levels. Everything was fine. Break of the structure very clear. Also, aggressors came with the green bubbles. a support of volume delta, significant higher volume than the no, even this one before, yeah. But she patiently waited for entry, and she has noticed something like a horizontal structure, and yes, and took a breakout from the structure with the higher volume. Perfect entry, perfect stop loss, and even could be higher, in my opinion, because it's a breakout of structure. So probably it will not go back. Could be below the pivot, and very fast take profit. Hit the single as you learned, as you teach us, and it's very nice.
Definitely.
Yeah. Nadia, like, way to go, and way to break the rules in so many different ways here, because you're, like I said, it's really about understanding the context of and the concepts behind it, and not adhering so much to, like, it's got to do exactly this and exactly that. I mean, your 3+ levels, like, I wouldn't count this one as one, to be honest. I like this, I like this here, and then maybe there's a little bit down here, but really I would just love to see it trade into this.
Yeah.
It didn't. Anyway, and then again, so there's really only kind of two, I think. It broke your trend line, but you didn't get in on the break of the trend line. You waited. You waited for this, right? Now you know, like, you've kind of got something. So it's not about the break of the trend line. It's a break of structure that's important. Any reversal has to break structure. That's just part of it. We need to look for the context of how it breaks that structure. And you understand that, and you're looking for an entry to get in. You manage the stop perfectly, beautifully, and also you manage your take profit where it dropped from here. I mean, you know, I like to do exactly this as well, where it broke from here, because I know there might be some selling that comes in, instead of, like, trying to always, reach for that higher liquidity. So well done on that. Yeah, I don't know. It came up there and tested there, but you might or might not have gotten filled on that. Whereas, like, here's another structure, and a retest of that structure is kind of what I'm looking for. You just see it again and again. It did it here and did it here,
Yeah.
and in fact it did it here again, and again. And that's your low volume pullback. But, like, anyway, you get the idea. Yeah, so keep going. I mean, way to go. And way to understand that this context. This is what I think is going to make a massive difference for you.
Yeah.
So David, over to you.
Yeah, sure. Can I get you to go to the chat again, Bruce? Sorry. So echo everything said. And this takes us back to, I'm going to go a year or two when we'll be talking with Jack. These patterns, like every pattern, David, they happen day in, day out, all that sort of stuff. I love to trade these, and I do trade them using my Ninja, my ATM, as I often talk about. But those higher lows, I've got the liquidity T's, all the volume stuff going below, love it, tick, 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 it's there. It fails dramatically. It doesn't go. We can see the liquidity building. They're almost chasing it, bullying, whatever word I want to use. But we're then printing across those bubbles, those higher lows. Yeah, not quite high highs, but higher lows. That there is a scalp up, and I'm on them. They're higher risk for sure, because I haven't followed the checklist that we've just. Thank you. But that happens. You look, even at today, there were these type of trades happening, and if you're quick on your stops, they're a certainty, because look how vertical the price goes. As you're saying, Bruce, might be 4 handles, 5 handles, but it goes vertical. It's beautiful. Yeah. So I love these trades. Love them very much.
Yeah.
That's me.
Yeah. Nice. Nice stuff.
One other thing to note in here, if you can go back to the trade, Bruce. Yeah. So she waited for the volume to come in, but you can see, I think the plan was to get down to 61 for the market.
Yeah.
Before the
Yeah.
entry down there, but the volume was convincing for her to take the trade to get long. And one thing that Stephen mentioned in the chat is that he likes to go for the longer, the bigger moves. And I would say not to that, because that liquidity down at 61, that stays in the market.
Yeah,
And
doesn't
the
follow the
market
price.
eventually gets down there to that level. So as long as that liquidity is in the level, is in the market, that I see that as a presence. I see that as an intent. And so she took her profits beautifully there,
Yeah.
and I would be quick to take profits there for as long. Now it'd be a different story if that liquidity went away, like we saw, I think, on our first trade. But the liquidity stayed in the market, and I see that as the intent for some pretty large participants that want to get the market down to that area.
Yeah. Absolutely. Great point. And like you were saying, John, or maybe it was David. I mean, but these events here happen all the time. I mean, all the time. I mean, like it's understanding the kind of the smaller. I mean, because it's a smaller kind of setup in here, you're looking for a smaller move.
Yeah.
And that's it. Get out.
Yeah.
And bigger picture though, David, you're looking for this.
Yeah.
And you're looking up here at this liquidity or this liquidity.
Yes.
And you're looking at something like this, and a break of structure somehow.
Yes.
And once you start to, you'd probably be in over here someplace, and maybe take some off here, or maybe here, but this is your target.
Yeah.
I mean, John, you tell me. I mean, that's what
I
know of your setups. That's what.
Absolutely.
You're looking for.
You're just following that dynamic between liquidity and volume. Absolutely.
Yeah. And you got your bigger structure right here, right? Here's your bigger structure.
Yeah.
So you slice and dice it all sorts of ways. So
definitely.
all right. Let's see. We got another one for Nadia? But I think if not, maybe we can. We do. Oh, we do. All right.
So that's 4 yeses for Nadia. She's doing great.
Yeah.
Just like in the judging competition. 4 yeses. She's doing great.
Okay. So this is, I think. Oh yeah, this is. I think you're looking at a continuation pattern in here, Nadia. Is that right?
That Nadia?
I mean, this doesn't look like Nadia, but I think it.
No.
Yeah, it is from Moby.
Okay.
No, it does not look like her trade.
It doesn't.
Stephen's claiming that one. Well done, Stephen.
Okay.
It is Stephen.
Oh, that's you. Okay. So Moby threw us a curveball there. I think, right? He didn't say.
Yeah, he did for you a little.
Yeah. Okay. All right, Stephen. Well, then we got 15 minutes before kind of end of the session here, but let's bring you up to the stage here, and you can walk us through the trade.
He's also drunk. He can't come in.
He's got a couple of wines. I'm going to put a wine glass on him.
Sorry, Stephen.
Can't come up. Okay. Yikes. Oh, we're 0 for 4 or 5, right? Okay. Well, I mean, I see the break up here, and nice impulse move, nice move away. That's what you're looking for up here, and it accepts. So this was just a couple days ago. Okay. This looks a lot like what the other trades we just went through earlier, like your orb trade. But I don't know if the time of day, Stephen. This was 1500. So yeah, maybe this is your ORB trade here. I believe so. So I think this is the same trade that we looked at earlier.
Nice.
Yeah, with Nan.
Yeah.
Yeah, it looks like
Lovely
it.
volume bars.
Yeah.
Yeah.
So yeah, you got your looks like your ORB. I don't know, Stephen, if you remember, was it a opening range breakout? Seen books. Okay. Not sure I understand.
No.
We've got the time at the bottom or to the left, on the left. It's 15 something east.
Yeah. I
And
mean,
this looks like,
but he's in Madeira, so I know that that should be on. That's London. That would be 5 hours then. So this would be
Okay.
like 10:48 or something like that. I think here East Coast time, something like that.
RTH close, he's saying. So he's set it at.
Oh, okay.
yeah, I think that's late in the day. I think that's
Okay. Okay. Well, anyway, that's a pretty decisive move in my book, and trades into high liquidity down here and keeps on going. You see some high liquidity here, transacts, and I don't know. I don't really have too many comments on this. There's definitely a lot of selling.
yes.
And this move in here was, I mean, I don't know, guys. Like, I mean, I kind of speculate on some of these things about the what's behind this, but I at a certain point, like, I think some of the larger players, they just had enough, and they just move it away, and hit the sell button and hard. Or maybe I don't know what to say, because it's just speculation. But after that is nothing but selling, right? I mean, look at that. That's just an onslaught there. Anyway, I'm just going to turn it over to David, since he trades the close on some of these things. Take it away.
Yeah, sure. Stephen is saying there's another chart as well, Bruce, we can look at on this.
Okay.
Slide 2, so that's slide 1 and 2. Yeah, I do like to trade the cash close. That is for sure. That's brutal. Let's have a look at this. Nice candle. We'd like a candle chart, Stephen. Thank you.
So this is it over here, really, on the higher time frame. So it's just this move down here.
Very nice. 13 points. Beautiful. Yeah. I mean, the thing I see here on the candle chart, Bruce, it would be the same on your chart, is just that failure. We can see at 3 o'clock, we're starting to get that failure on the top that you're going to.
At 3 o'clock is over here, is what I got.
Yeah.
Okay.
So I assume that's where he's gone in, because this is an Ninja chart of 69.76.5. I think he's got in.
Yeah, this refers to slide 1. You're right. Yeah.
Yeah.
Okay.
And here it's very clear that it's come back up, and then you got that failure, that sort of like lower highs that are getting carved, and the candles, the wicks, and that's where he's getting in, which makes perfect sense in that power hour. Yeah. But not much more to add, really, Bruce, on that. Sorry to be a bore, but yes, your bookmap chart, as you said, it's selling. But the entry's great on here. The entry's really good, Stephen. Respect. That's really good entry.
Yeah, I mean the only thing that I mean it's kind of a hard read. I don't have a good feel for what's going on over here, but like certainly this is
Hugging the POC, the thin yellow line, then it
your bigger impulse move here, chop, and then your impulse move in here.
Yeah.
So doesn't even look like a wedge or anything. It just kind of it's a mess. That anyway, John, any comments?
Yes, well, like you said, Bruce, it's all selling. There's a lot of volume in here. I do think this is near the end of the day. So you're going to have squaring up of the books. You're also going to have the 0 DTE options. So if they're slightly in the money, they're going to chase the market down and take off some of that intrinsic value. So that could be the reason behind some of the selling that's coming into the market. But I think he played it very nicely by trading with the volume, the high volume of selling coming in here by the volume bars, and to stick with it the way he did, fantastic. But as just context, like I said, you're at the near end of the day. You have the bouncing of the books, and then you also have the SPY options, and the index options, 0 DT options expiring. So you want to get those out of the money if there's anything in the money. So I think that's probably what was going on here.
Yeah, I think you're right, John.
Yeah, interesting. That's such a great insight, John, that you with that option stuff and putting that context into everything. How it's like, wow, they're holding all this stuff and they don't want to hold it. They have no need to hold it any longer, and they just let it unwind.
Right.
And you look for that as a setup. And
that's a big force. That's a huge force, and it's growing all the time. Yeah, for sure, absolutely. Those shorter duration, it's a lot of money, and they can squeeze it 5 or 10 handles and eliminate a lot of value, eliminate a lot of intrinsic value. Yes, we see it every day.
Yeah, yikes.
Yeah.
Yeah. Anyway, it explains a lot of these kinds of moves. It gives another layer of pretty deep insight. Great stuff there. I don't know, guys. I have no other comments on it. I don't know if Robert, if you have anything that you want to add.
No.
No. Okay. And let's see. Yeah, I think that's it. If there's no other comments, guys, let's wrap it up, and we'll call it a day, and we'll let Robert. You had the last word last time. You did a really gracious job on the outro, so I'll turn it over to David on this one.
Too kind. Well, thank you, everyone. It's been great catching up. Apologies if we missed a couple of the questions and we made a bit of a word salad. Please keep the postings coming. Brody, if you have a look on the Bookmap website regarding the Academy and how to become part of that, that will lead you through. I'm sure Dan will reach out to you as well on that. Stay safe, trade well, and I look forward, Bruce, and everyone, to catching up next week. Have a nice weekend when it comes. Thank you.
Excellent. Good night. Thank you.
Good night. Take care. Bye-bye.
Thank you.